It is September, and in the Phoenix, Arizona metropolitan area, we are currently recording a price per square foot of almost $284. That is the average of all areas and types across our MLS. This is down 1.5% from a month ago in August, so not a huge decline. However, there are certain cities and zip codes that are suffering more than others. Watch this video till the end to find out which ones. This is Celina Acosta, your trusted real estate advisor, with our real estate market update for Phoenix, Arizona, and the metropolitan area for the month of September 2022. The average price per square foot is now back down to the level it was at the end of February. The market is softening month after month for the last 4 months. However, it is hanging in there. 99.5% of homes under contract are normal sales, 0.1% are foreclosures or REOs, and 0.4% are pre-foreclosures. The distress segment of the market remains very, very tiny, so this is an indication that our market is not in trouble. So how come there is hardly any foreclosures or REO properties for sale? That's because almost every single home has equity right now. Homes have gained so much value in the last decade, especially the last 2 years, that if anyone is distressed and is being forced to sell because they can no longer afford their home, all they have to do is sell it at market value. The downtrend in pricing is expected to continue, but at a moderate pace. The recent sharp increase in interest rates undermines the stability that was beginning to accumulate in late August and early September. Interest rates are volatile right now. We still have low supply compared with long-term averages, but in certain market segments, it is definitely excessive for the current demand. With demand expected to weaken even more, we don't expect anything to reverse this downward trend unless a miracle happens and interest rates go back to 3%, which is unlikely. So we don't see anything reversing the downward trend, and simultaneously, we don't see a market crashing anytime soon either. Why? Because market collapses when inventory becomes excessive, and our inventory is not excessive. Let me give you an example. This week of September of 2007, we had 340 days of inventory, meaning that it would take 340 days to sell all the houses for sale if no new listings hit the market. We currently have 73 days of inventory. So really, put those two numbers side by side and really keep it in perspective. Because our long-term average is 117 days of inventory. So long-term average, 117 days, current average, 73 days, and just before the crash, we had 340 days. Our inventory is not the problem here. The problem, in my opinion, is that home prices are so high, higher than they've ever been, and higher than the average Phoenix, Arizona salary can afford. So that's really what is keeping the average buyer that needs a home on the fence. So anyway, home prices got as high as they could in the spring, and now they're settling where they should be, and this shift happened very quickly. Let's look at the new build segment. In the new builds, we went from builder lotteries, waiting lists, not offering any incentives or concessions to buyers at all, to more than 32% of new home sales that closed last month had concessions to buyers. And now in September, I see almost all of the builders are offering rate buydowns and a lot of incentives in order to compete with the resale market. And in the resale market, home sellers are also offering concessions to buyers because they are competing with the new homes. The percentage of closings with seller-paid concessions continues to grow, and in the last month, we had 12 to 13% of total sales in Greater Phoenix had seller concessions, inching closer to the normal range of 25 to 28%. Here are the worst areas where the decline in home prices is happening at a faster rate. Casa Grande, Maricopa, Santan Valley, Coolidge, pretty much most of Pinal County. In Maricopa, Tolleson, Buckeye, and most of Western Maricopa County. So basically, the areas on the outskirts are hurting the most. And in those areas, 20 to 30% of sales are closing with seller concessions. meaning the seller gave the buyer a financial incentive to buy the house. These outskirt areas have more new home subdivisions than the inner cities, so the competition with builders there is brutal. As mortgage rates remain volatile and difficult to predict, it's important for buyers to get educated on the lending tools designed to ease the impact of these dramatic rate swings. In the last month, I've negotiated seller concessions for rate buydowns, credit for repairs, and other tools such as the lock and shop option offered by some lenders that allows the buyer to lock at an acceptable rate, and then they have 90 days to shop for a house. Buyers who are less affected by mortgage rates but are looking for the best time to pounce on a home should know that the fourth quarter of the year tends to be the best time for buyers seasonally. There is often a boost in supply around September and October, with sellers eager to close at the end of the year. Once the new year gets started, contract activity is expected to rise sharply from January to May, peaking in May. The upcoming Super Bowl, Phoenix Open, and spring training events are expected to generate more sales, open house traffic, and exposure for active listings. If you're a seller, just know that gone are the days of multiple offers and desperate buyers waiving appraisals and inspections and giving you more money than asking price. Over the last 6 months, the housing market has shifted from an intense seller market to a delicate balance, the predictability of which relies on the behavior of the interest rate. Until rates move below 5%, demand in the coming months will most likely remain weak, thus putting more pressure on the sellers to reduce their price, offer more concessions, pay for the buyer's closing costs, etc. Many sellers are sitting on significant equity, so they're able to do this and still make a significant profit. There you have it. That's your September market update for you. What questions or comments do you have? Comment below. I hope this was helpful, and until next time.